Most traders think strategy, indicators, or market knowledge will save them, but none of that separates the 10% who consistently make money from the 90% who blow up their accounts. The real edge, the one almost everyone ignores, is patience. And if you're like most traders, this is exactly where you fail. Trading is the only profession where doing more destroys your results. In every other job, more effort equals more reward. But trading flips the entire logic upside down. The study that exposed the truth researchers at UC Berkeley analyzed 66,000 trading accounts over 6 years. Most active traders, 11.4% annual returns. Least active traders, 18.5% annual returns. Those who traded the most weren't earning less. They were being systematically destroyed by their own activity. The market doesn't pay for effort. It pays for precision. The trader taking 50 random trades a week loses money. The trader taking 5 high-quality trades builds wealth. Why traders fail at patience? Human psychology is built for action. Our ancestors survived because they reacted quickly. We're literally wired to move, to chase, to do something. But the markets punish this ancient instinct. Doing nothing in trading feels like losing control, but forcing action becomes your biggest enemy. Ask yourself, when was the last time you sat at the charts for hours without forcing a trade? When did you last wait for a perfect confirmation instead of jumping early? Most traders can't sit still for even 20 minutes, and every unnecessary click costs you money and confidence. The neuroscience behind your bad decisions. When you see a potential setup, your brain fires up. The anterior cingulate cortex creates urgency. The nucleus accumbens releases dopamine. You literally get high before pressing buy or sell. Here's the wild part. The dopamine spike hits before the trade, not after. That's why you feel empty immediately after entering a position. The dopamine crash hits. Reality begins. Professional traders treat this rush as a warning, not an invitation. They've trained their brain to see excitement as danger, not opportunity. The dopamine trap. Your brain doesn't care about profit. It cares about anticipation. This is why winning trades can be as dangerous as losing trades. After a win, you immediately want another dopamine hit. You start forcing setups that don't exist. Overtrading becomes inevitable. The best traders I know reward themselves not for entering a trade, but for skipping bad trades. They get their dopamine hit from discipline, not excitement. FOMO, the silent account killer. Daniel Kahneman proved that humans feel the pain of missing out twice as intensely as the pleasure of gaining. That's why watching a chart rally without you hurts so much more than catching a rally feels good. You imagine others making money. You feel left behind. You feel pressure. And FOMO pushes you straight into terrible trades. The market is psychological warfare. Institutions understand retail psychology better than retail traders understand themselves. Breakouts get faked to trap impulsive traders. Obvious support/resistance levels get manipulated. News is exaggerated to provoke emotional decisions. Patience makes you invisible to this manipulation. When you wait, you avoid the traps other traders sprint into. The illusion of control. You cannot control whether your next trade wins when opportunities appear. Market volatility, institutional order flow. But you can control your risk per trade, your entry criteria, your exit criteria, your discipline, your reaction. Impatient traders try to control outcomes. Patient traders master the only thing that can be controlled, themselves. This internal control creates psychological stability that translates into consistent profits. Tiny decisions that compound. Every small decision adds up. Skipping a bad trade strengthens discipline. Sticking to risk rules builds longevity. Waiting for premium setups increases expectancy. These choices feel small day to day, but over months and years, they create exponential growth. The reckless trader dies fast. The disciplined trader thrives slowly and steadily. Think in decades, not days. Trading isn't a sprint. It's a career, a lifelong skill. When you think long-term, missing a setup doesn't matter. Waiting becomes easier. Emotional noise becomes irrelevant. The impatient trader thinks about today's profit. The patient trader thinks about 20 years of compounding. Time horizon is the difference between gambling and mastery. Patience. The only free edge indicators can be bought. Algorithms can be copied. Strategies can be taught. But patience? That's an edge anyone can develop, yet almost no one does. It costs nothing. It pays everything. Breaking the overtrading addiction. Here's how to retrain your brain for discipline. 1. 30-minute circuit breaker. After every trade, win or lose, wait 30 minutes before analyzing the next setup. 2. Energy budgeting. Use your peak 3 to 4 hours of focus for quality setups, not noise. 3. Opportunity journal record. Every setup you didn't take. Review monthly. You'll see that most missed opportunities weren't real opportunities. 4. The 5-minute pre-market calm. A short meditation activates rational thinking and reduces emotional impulses. 5. Physical distance rule. Keep your mouse away from your hands during analysis. Reduce impulsive clicks. Why patience feels like failure. Social media makes it seem like successful traders are always active, but in reality, the best traders spend most of their time doing nothing. Waiting is not weakness. Waiting is strategy. Waiting is power. The final fork in the road. You now face two paths: path of impatience, overtrading, revenge trading; forced setups, slow destruction, path of patience, waiting discipline; selective execution, long-term wealth. The market doesn't care about your pressure, excitement, or timeline. It rewards only those who wait for their pitch. Most traders rush. A few wait. Only one group survives.